Hey, Justin Gordon here with FBinsure. I actually reached out to a friend of mine, Matt Morizio from Beck, Bode Financial Services, an investment firm, and we had a pretty good conversation going. And I thought, let's take it to Zoom and have the conversation there. That way we can record it. And so the number one question that I'm getting from people is now a good time to invest? I mean, I hear it from not only my insureds, but I also hear it from family and from friends. Like, is now the time to throw some money in something? And if so, what am I doing? Am I taking a large gamble here by investing in something now? Do I wait until the stock market goes even lower? Is it going to go even lower? I mean, what are your thoughts around that?
Yeah, I get the same question too. I'm glad you asked. Honestly, like you can't time the bottom. If
Right.
you do time the bottom, you're going to be lucky that you timed the bottom is the reality. So nobody knows. It was down at 18.5. It was up. It's up 20-something% last week. The market, it might go down again. The rationale behind the short-term swings, it's incomprehensible. We don't even have the day before the stimulus package was officially announced, the market had the best day since 1930s,
Sure.
but nothing was even official. The day that
Right.
it was announced, the market went up a few points. So you can't time it. But what I do say is, look, believe what you see, not what you think,
Yep.
or what you feel. And what you can see is that the market is much lower than it has been in the last couple years, 2-3 years.
Sure.
And if you look at historically, every single one of these bear markets or corrections that it happens every 1 to 3 to 5 years, every single one of them, America has rebounded. So yeah, it is a good time because we are lower than I tell everybody, we're lower than we've ever been in the last handful of years. And unless for some reason America can't recover from this one, which is unfathomable,
Right.
you're going to be better off buying now than waiting and trying to time the perfect bottom, because it's an impossibility.
Sure. And
So,
as far as what people are looking at, I mean, is there anything in particular that people should be keeping their eyes on? Or, I mean, are we talking individual stocks? Are we talking, mutual funds or some sort of growth fund? Or
I would say, look, if you're going to invest just with anything in general, before you put a dime in any type of investment, either you or the person that's investing on your behalf just really has to know that space really, really well, whether it's real estate, it's stocks, it's Bitcoin, or it's fine art, it's trading cards. Who cares what the investment is? Whoever's doing it better just know the space really well, because
Sure.
otherwise it is kind of gambling.
Which sounds simple, but at the same time, like I said, it's like anything else. So, people have a specialty in a certain area, and it's finding the right person that has a specialty to the area that you're looking to put your money into.
Yeah, so it's either find a person with a specialty, and history has shown with like people like Warren Buffett and some of the big hedge fund managers like Carl Icahn and Ray Dalio, they place big bets in individual companies or individual trade moves. They don't buy like the entire market, which is like an index fund. So if you're going to make big bets in individual stocks, then hire somebody or spend a lot of time doing your own homework. If you're not, you could put it in an index fund like an S&P 500 index, which is just a fund that tracks the market basically. And you could pretty assuredly rest easy at night knowing like in the next 5+ years, this is going to go up. This is going to be in a good spot by just putting it all into an index fund and not even looking at it.
Yeah.
That's what I would say. If you're going to try and do it yourself, don't try and pick winners and stuff, because unless you really spend significant time, it's more gambling than it is investing.
Now, when you say that, I know a lot of people, blue collar workers and the people that I work with, they think that their 401k is a gamble. That 401k is just all right. Yeah, they take money out. I made a decision a couple of years ago to take X% out. And they take my 8%, they throw it into a fund, and I don't know where I'm going to be in 30 years. But what about now? I mean, is now a time that we're gonna let this roll? Do we let our 401k go and hope that it's going to rebound too, or is that something that I should be thinking about, taking half that money and putting it into a fund somewhere that can at least accumulate something? I mean, I know it's not my bank account, because my bank account's not accumulating anything. Right. Not that there's a lot of money in there, but I can see what the interest rate is,
Yeah. Look, if you've been in it, don't get out of it, because you don't technically lose money until you sell, till you get out of the market. And right now is a terrible time to sell. It's an emotional time to sell. The market's down, so you'll be in effect selling low, and then when you emotionally feel better, you're going to buy high, which is the
Sure.
exact opposite of what you want to do. It's hard to do, but really at this point, if you've been in the market, you have your 401k, continue to make contributions. If anything, I would accelerate some contributions right now
Sure.
because the market's lower. But stay in there, stay invested. Even if you're 65 listening to this, you got a long life to live. And that's how you have to look at this money, not just, shoot, I'm going to retire next year. What's happening to my money? You still have to think like, I have 20, 25, 30 years to live. What am I doing with this money? Which really, really, really stretches out the timeline. And that makes this a little bit more palatable.
That's a great point. That's a great
But
point. And that's not a way that I've ever looked at it either. I would have thought that if I was 65 years old, I'd say, let's grab my money and run before it, before it goes completely to nothing,
yeah,
and that's just a
yeah,
mindset. Not that anything's going to go to nothing, but the mindset of, hey,
right.
let's get it out now.
Totally. Yeah. Just got to let it ride. You got to think of like your death date, which sounds morbid, but really when you're thinking about that money that you put away to save for your future, like it's supposed to fund the retirement years of your life, not just the first
Sure.
year of retirement. So you got to figure out how to work that money over the next 20, 30 years.
Yep.
But yeah. So anyway, I appreciate those questions.
All right. Well, hey, man, it was always good talking to you. And like I said,
Right,
I'm sure we'll do it again because unfortunately, it doesn't seem like this is going to be changing anytime soon. And the more and more questions I get, I definitely want to lean on you and get back to you with some more questions from
That's so
people.
good. We're not hiding. No need to hide under the desk. Like this is a hard time. Let's be here and be helpful.
That's cool. That's it. Like I said, that proactive approach is something that we're pushing very, very hard. And we just we know that people like yourself are in the same boat. So there's nothing better than being able to bounce some questions back and forth off you.
Yeah. Awesome, man. I thank you for doing this. It's cool.
All right, man. Good seeing you.
You too.